Welcome to another episode of the FamVestor podcast. I'm your host, Sunmarie Burns.
And I'm your co-host, Sunny Burns.
And we've got a great episode for you today on life. Life in general, the ups and the downs. We're going to be speaking with Holly and Tad Grosvenor. And we're going to talk to them about so many practical things about finances and life encounters, passing of loved ones, the kind of financial whirlwind you go through at a time like that in your life, going through college, affording it, saving and planning for a financially responsible future, having kids, having multiples. They had twins.
Identical twins,
and the journey that is for a young family who is dealing with raising twins and all the little life hacks that they've put together for dealing with all these different life circumstances.
Yeah, what I really love is they talk about creating a legacy binder. You know, that includes like your will, all your passwords to your finance account, and just so all your loved ones know exactly where to access everything and where all your financials are, and just general things about what you want to do should you become deceased.
A lot of great golden nuggets in here on just how to organize your life in such a way that it's well planned out and well structured for you and your family and your loved ones at all times. The happy moments, the sad moments, and everything in between. So without further ado, let's get the show started.
You're listening to the FamVestor podcast. If you're looking to raise your family with intention, gain financial independence, and live a life of true freedom, you're in the right place. Join us as we explore together how to create thriving families, because strong families are the cornerstone for a world at peace.
Hello, everyone, and welcome back to the FamVestor podcast. Today, I'm excited to have Holly and Tad Grosvenor. Holly is a personal finance coach at microstuff.com, where she provides one-on-one coaching on basic personal finances, goals, debt reduction, spending, and savings plans to couples, parents, and soon-to-be parents. Tad is an IT professional during the day and has many hobbies in the evenings. They have been married for over 17 years and have 3 children, including identical twins. They each have many passions and hobbies, including cars, crafts, do-it-yourself projects, and volunteering for kids' activities. Well, Tad and Holly, thank you for joining us on the show.
Thank you for having us.
Thank you so much for having us.
Yeah, so we're really excited to have you. I think you have a really interesting life journey, and I'm curious to delve into it. You seem to have a lot of great habits towards frugality, financial independence, and just a really mindful lifestyle that you've been creating since the get-go when you first two met. So how about you tell us a little bit about how you met and your story?
Okay. Well, we met at George Mason University. We had 4 out of 5 classes together. So it was kind of inevitable to meet him. And it was one of those moments of, wait, I've seen him before. And why have I keep seeing him around? And so we both started hanging out and we became good friends. And from there, it was, it didn't take long before we started dating. And, we started realizing we had similar interests. And he introduced me to cars and some hobbies, yep. As well as him coming along with me with some of my hobbies. But at the same time, when we were at George Mason, we both worked. So we both worked part-time as well as going to school full-time.
Wow. Okay. That's a very smart move, but that's also hard on any college student to balance work with studies.
Yes.
It was, but it worked for us. We each took out college loans to make up the difference, but we were both trying to pay as much as we could as we went in order to keep the college loans at a minimum.
That's
smart.
Awesome.
Yeah, very smart.
What did you guys end up graduating with?
Of debt?
Yeah.
We had, so I think it was a total between $14,000 to $20,000 worth of debt. Also, the fact is we went to George Mason, which was close to our home. So we both lived at home.
Okay, so you commuted. Okay,
so
same
commuted.
With us.
That helped a lot in our reduction in costs.
Yep, I took a year on campus. I just wanted to experience that. But once I checked that box, I moved back home and saved the money.
Mm-hmm.
Nice.
Smart move, definitely.
Yeah.
Oh, well, that was very, very intentional choice in college to do something like that, and you save so much in living at home and studying from home.
Was that a work study that you guys did part-time throughout, or that was another?
It was not. No, I mean, for me, actually, the week I had to make the decision between colleges, I went down and visited another college that was a couple of hours away, which was my other top choice, along with George Mason. Went down and wanted to visit it one more time, and ultimately decided, largely because I had a job, I was working professionally at the time, that I wanted to stay in the area and continue to do that. The other college, there were some opportunities there, but they weren't anywhere near as great as they are here. So I made the decision largely because of that job, and then worked all the way through college.
And for me, it was a little different. It was actually because of the cost. So George Mason cost a lot less than a lot of the other colleges in the area. And my father and mother had looked at college costs and realized that they hadn't saved anything. And so they pointed out to me that I really had to get loans in order to go to college. And so I needed to really look at what colleges were available that were reasonably priced. And my father happened to go to George Mason and loved it. So he was sort of emphasizing George Mason as the option. And I was like, that sounds like a great idea because I could work at the same time.
Right.
The only thing, though, I'll say that I did do, which, looking back on it, it made sense. But, looking at it now, in my perspective, was also a difficult one, was that I ended up getting a car loan. My father said, instead of going to go to college and get a reasonable car, let's get a car loan so you have a more reliable car while you go to college. So that was one requirement I had to do, was pay for that car loan.
And I only had a car loan for about 6 months. I bought a car that was expensive for me at the time, had the loan, and then ultimately 6 months later sold the car and went back to a car I could just afford to pay for it in cash.
Nice.
Yeah. Interesting. Okay, so you were in college. It seems like you had some family input, at least Holly, on your side you did, in choosing your school.
Yeah.
And you seem to have a pretty sensible mind as far as finances go, which I think is not always common with college.
Not very common, especially with
students.
Everyone graduating with six figures in debt these days.
And we had some things that, looking back on it, particularly Holly will look back on it and think were kind of silly. I mean, I used my first credit card, which had a $500 limit, as a budgeting tool. I just buy things until I hit the $500 mark. I was working. I could easily pay that off. And then that would essentially be what I'd spend for that month. And then I'd pay that off and start again the next month. And it wasn't too much of a crimp on my lifestyle to do that. I could still buy gas and cash and things like that, but it limited what I was using my discretionary funds for. But looking back on it, probably not great to just push the credit card to the red line every month and do that. But it really didn't hurt. There were other things like late fees that Holly looks back on it, and it didn't bother me too much. I knew I was paying for the convenience of the late fees, but she would get on my case, and still does, about the fact that I had late fees then.
So it sounds kind of like the typical American story of, saddling up debt and then, just paying the late fees, paying the high interest fee. When did your mind, because now you guys, you're saying that you're going to achieve financial independence in your 40s. When did that start to shift? What triggered that shift? And yeah.
Well, it's kind of funny because that has sort of always been there for me. My parents are more on the frugal side. My dad has this quote that, not to buy something else that takes like accessories, like a CD player, for instance, as he puts it, is another mouth to feed, because then you're going to be buying CDs. It's just things like that. And I just grew up with that mindset. So even though I was maxing out the credit card every month, I was paying it off every month.
Okay.
And I was actually continuing to save. We ended up with enough savings to put into the down payment on our house right after college.
Amazing.
So it wasn't like we were spending a huge amount, but there were just habits that we had then that weren't the most efficient way to get to our financial independence, we'll say.
Yeah, exactly. Like, for instance, for me, I'll say back to the having a car payment. So my father, that was one recommendation that he had, was to get a car loan because it seemed like it was such a good idea because it would help with credit.
Right.
Building credit. And also, like, I had put money down on that car. Like, so it wasn't like it was a huge loan. It wasn't. It was a small loan. It was very reasonable. Looking back on it, made sense. But also at the same time, it's like, should have just gotten a car that was cheaper. But then at the same time, my father also recommended that I keep a balance on my credit card. So I also had a $500 limit credit card, but I was required to keep a balance. And so as he and I were going, our journey just together dating, we started to realize like there's these fees, and I started pointing them out to him and so forth. And then it gets into our real awakening, I think, really was when my father had his heart attack and passed away.
Yeah, just to circle back, I've heard that so much. Like, you have to, in order to have good credit score, you need to like carry an interest rate or carry a balance, and it's just not true.
It's a common misconception.
And I proved that. I mean, I never carried a balance on anything, really ever. And ended up luck of the draw higher than Holly for several of the years. So
I believe it.
Yeah, we've never carried a balance. I think we just hit 800s recently.
Credit score.
Yeah, and just like it's insane that like the myths that are out there about credit scores.
Right.
Oh yeah, we've been in the 800s for a long time, and and we have been paying off our credit cards since. Was it 2004?
Yep.
Yeah, but I mean, at the time, again, it was different financial advice from people influenced us. My parents wanted me to get a debit card and use that as my payment method, which was great until my card got taken. And debit cards don't have the same protection as credit cards, and that was just a huge hassle.
Especially back then.
Yeah, especially back then.
Back then, everything was so new.
And so I ended up getting a credit card with the $500 starter limit and using it the way I did. So it was just, it was a learning path for everyone because I followed their advice, which was founded in their reality, but things had changed a little bit and just didn't work out perfectly for us.
Right. So Holly, what happened when your dad died?
So my father died due to a heart attack and complications after several weeks in the hospital. And after that, it was my mom and I had to try to figure the finances out. I'm an only child, and my parents had been married for, was it almost 25 years, give or take. And my mom was kind of in charge of the household responsibilities, and she liked that. And my father was in charge of finances, and he had different hobbies and do-it-yourself kind of projects, and he enjoyed that. The hard part with the finances was they just never communicated about it. So my mom had no idea how to pay the basic bills. So even when he was in the hospital, we had to try to figure it out as to
even what the bills were, what was going to be coming in,
and remember, this is back in 2000, between 1999 and 2000. So back then, you had Y2K, which was also a big concern. You had, the internet was not really there. Right. So everything was manually, mailing in with a stamp, your bills and, your checks and things like that. So,
but I mean, there were mysteries there. I mean, the monthly ones started to show up and we were learning about those, but then it was like, well, how do we pay for oil? Yeah. Because that's not something that shows up every month. Is it once a year? Is it once every 5 years? Is it once every other month? We really had no idea.
Yeah, exactly.
I remember calling the oil company and saying,
trying to figure it
when
out.
do we buy oil? And they said, when you're out. And I said, well, I don't know what that means. I mean, I know what it means to be out, but I don't know how to check that.
Right.
So there's just a lot of learning about just how to pay the bills and how to talk to the people who were sending us the bills.
And especially like the hardest part back then for us was my mom and me was figuring out the insurances, because we went through 1999 insurance policy and a 2000 year policy. So we had to go, I learned so much about insurance and dealing with all that and trying to figure out the bills with the doctor's offices, multiple ones. And there were so many.
And calling up and negotiating. And then 6 months later, a bill from an anesthesiologist would show up and we'd have to call them and say, hey, we settled this, or we didn't, but we have no record of having seen you.
Can you talk to that in a little more detail? Just because I feel like it's so insane. Like you get all these bills all the time, and then it's like a simple phone call. It's like, oh yeah, that $2,000 bill. Actually, don't worry about paying that off.
Yep.
But I feel like so many people just hand over that $2,000 check, no questions asked, and it just like it's insane to me. Like it's
and it's not intuitive either. That not only might you just be able to call up and not have to pay the bill, but even if you are liable for that charge, you can call up and negotiate. You can figure out what billing code they charged insurance for and see if they can resubmit it under a different code, and get different or additional coverage. I mean, there's things where some of the doctors will waive the fee to the people if the patient has passed away, which I mean, is just
what happened.
There's just all kinds of things like that that aren't ever written out. And the first approach from the billing office is to just send the bill.
Out of all your bills, how many do you think you were able to negotiate?
Oh man,
most of them,
a lot of them. I mean,
and you're talking like 20, 30, 50 bills, something like that.
Oh my gosh. So based on our knowledge, my mom and I going through it all, he easily had well over $500,000 worth of medical treatment done because he also was helicoptered from one hospital to another.
Oh, wow.
And he had open heart surgery multiple times, including experimental VAD machine. Mm-hmm. He had a temporary VAD, which was like at the time is the size of a refrigerator, and had his, basically whole chest opened.
So there was a lot going on.
And
a lot of doctors involved in different companies. And
he was actually put on the heart transplant list at one point. So
there's paperwork with that showed up. And there were just administrative costs and things like that show up in bills. And, it's this company that sends you a bill for some administrative cost. And I mean, the first question is, what is this? And you can call them and sometimes they can tell you, and sometimes the billing department doesn't have the access to tell you what it was for. They just have a bill, and it just took a long time to unravel all of that.
And especially working with the insurance company, thankfully we did have a very good insurance company that was good about getting good EOBs, which is the explanation of benefits form, which a lot of, everybody needs to be aware of those and needs to look at them very carefully because that's what your insurance will cover, and to confirm whether or not it's part of your policy or not. And that's what we did a lot. I mean, it was every time a bill would come in from a doctor, any facility, we would compare it to the EOB. And if the EOBs, if it matched, great. Okay, then we knew what our responsibility was. If it didn't, then we needed to go and try to figure out what was wrong. And so forth. And also understanding the laws in our state, and we're Commonwealth in Virginia, and they have some very unique laws, including, and this can be in common in a lot of states, is that if you get billed more than a year after your the treatment, then you're not responsible.
No way.
Yeah. So that was a shock to us. We did not know this. So we end up learning this through the process. And our insurance company was really good about this because they're like, look, we're not paying this and you don't have to pay it either.
Yep. And it is tough when the insurance company says you don't have to pay this, and the billing companies keep threatening, sending bills and threatening you got to pay this and this and that.
Oh, wow.
Particularly, we're not interested in any kind of litigation or anything, but just the process is not really conducive to handling things like that.
Right. Just going through that process, was shocking. I mean, if we're 20 years old,
right.
Sitting there with my mom, God bless her, and we're going through this mourning, too.
Right.
And trying to figure all these details out. It was a very tough time.
That, and we were unraveling his rollover credit card debt that he's rolling from card to card. So there was just a lot to learn about finances in a short period of time.
Yeah, no, sounds traumatic for sure.
Yeah, I mean, you've been thrown into this financial whirlwind, a world that you're not familiar with. And I feel that is a pretty common traditional family model, that the father, typically takes care of the finance side, the mother takes care of more of the home management side. And so I'm sure that a lot of families have gone through this, and yet it's a topic that's not really talked about much.
And even if there's not those medical bills, there's always going to be that funeral bill and, the headstone and all that just wrapped in. And
just the living expenses, like you mentioned, different credit card debts that have built up, or different places money was going that you weren't aware of. If you have a house
Yes.
ownership, there's so many expenses that are incurred through that, as you mentioned. So you've really been thrust into this whirlwind journey of having to learn finances very quickly, and to just ask the critical questions at a time when it could have been very overwhelming.
Yeah,
So,
well, and it was still overwhelming.
Yeah.
We talked to other families around my parents. We talked to bankers.
Oh, yeah.
You know, we called all these companies to try to figure out what was going on. And you know, we just
Yeah.
learned a lot very quickly because we had to.
Yeah, we really had to. I mean, we had to, like, as he said, I mean, I worked for a doctor's office at the time. And as a part-time job, that was my job in order to pay for my loan and have my spending money while we're in college. And so thankfully, it was a good thing. I mean, they actually were some of my father's doctors, it turned out. But also I learned from them also a lot about the insurance companies because of some of that experience working with them in the office. I was able to, that helped us figure out who to talk to.
Mm-hmm.
Yep. And to expand on the EOB thing for a minute,
Yeah.
that's not just applicable to big events like a heart attack. If you get a bill from the dentist, check that, because
Yes.
it's quite possible that they build it under the wrong code. You know, they build it as you know, like a 3-surface thing, and you look it up in the chart from your insurance company, and you see, well, you know, based on what they did, it looks like the chart says 2-surface, and that's covered fully. And so I don't actually owe anything. And you can call the doctor's office and say, hey, you need to rebuild this like this. And, you know, they're rushing through things because it's just how they do it. And more often than not, we found they're willing to change that and resubmit it under a different code. And that can be, you know, for, you know, just a simple dental thing, for example, several $100s a piece in what we owe as a difference.
A week ago, actually, I got ACL surgery, knee surgery, from a recurring injury from 3 years ago. But I got a bill from the surgeon, and it was for like $3,000, and I'm like, wait, what is this? So I call up the hospital, my insurance, and I was like, hey, what do I have to pay? And the insurance said 30%. So $3,000 was 30% of the surgery, but 30% for the materials of the surgery. So like stitches and implants and things like that. So I recall the surgeon's office, and they're like, oh, sorry about that. So they correct it all, and it's just insane. Like, I could have just forked over $3,000, no questions asked, and I'm sure they would have been happy to keep it. But you know, just doing a little bit of due diligence can save you so, like, it's just insane.
Yep, and another component there that's related is that the doctor's offices all negotiate with the insurance companies for the various procedures, but they have different negotiations with different insurance companies. And sometimes, you know, we've gotten bills where there's a substantial amount that the bill says we owe, and just calling up and explaining which insurance company we have has them correct that, and then we end up owing sometimes nothing for that.
Yeah,
Interesting.
that's crazy.
So that's really a great tip, is to really look at your bills closely and make sure they are billing correctly, not take it, you know, at face value that what it is necessarily correct.
Yep,
Ask
absolutely.
those critical questions.
The other thing that doesn't hurt, although it's becoming less and less the case, is call up and ask if you can negotiate that component of the bill.
Yeah.
You know, it doesn't have to be some sob story. Just, you know, ask if you can pay, you know, for instance, an insurance negotiated rate if you're not doing that.
Yeah.
Yeah, we've had that work.
Yeah, definitely. And even like with my father, he had a surgeon that was not part of his insurance at all. And even because things have changed a lot, of course, since that time period, but it was supposed to be completely out of pocket for that, because there was no out of a network part of his insurance. So, but because we were able to negotiate, you know, it was hey, you know, what can we do? Because he had since passed. We were able to negotiate that really well. So, and so I'd say like my mom saved a lot, just and going back and forth on that.
Yeah, I mean, comparing the bills to what was paid, probably saved 6 figures.
At least.
I mean,
wow.
Yeah.
No, I believe it for sure. That's crazy.
Yeah.
So I think that's a lot of like great tips for people, you know, who are going through medical hardships or something, just to, you know, negotiate, and definitely just don't take anything for granted. Do your due diligence and make sure to, you know, either chop that down as best you can negotiate, or just make sure they're billing correctly.
I think it, as you mentioned too, brings up that point of the importance within a family to really be open about finances and for everyone to really understand what's going on so that you don't have to go through such a speedy learning experience when you're encountered with this kind of
exactly. That was not the best way to learn those things.
And Holly, I know you do a lot of financial coaching. Is there something you kind of recommend to people now, having gone through this yourself and coaching other people through maybe similar?
Yes, actually, and that's part of what I do with my coaching. Is I might focus on couples because again, I get it being in a couple's a relationship here and I like to work with couples because I really want them to be able to communicate this and to put things together. And so, in fact, I actually teach them to put together a legacy binder of sort or an emergency binder so that everybody is well aware of what's going on and when an emergency or something drastic happens, like what do you do?
Mm-hmm.
So the legacy binder is kind of for the husband and the wife, or even like grandparents.
It'd be for anyone. Yeah, I mean, it'd be great if our parents would do legacy binders. My parents have their own organization scheme, and we can dig through that. But the legacy binder construct for us is great because it creates a nice, simple structure. I mean, you can go directly to the tab for whatever it is you need, and it's right there.
Like, what's in this sort of binder?
So basically, it's a very simple binder that has tabs in it. So that is organized based on what you need financially done. So for instance, like it might have the section of bills. How do you pay bills? And this is like basic step-by-steps. And it tells you where to get passwords. So for instance, some people use password tools on their phone. It gives you explanation how to get there. Or if it's a password's written down, this is where to find them. Or for instance, this is the insurance cards. This is the insurance information, life insurance, health insurance, all that
it's got
stuff.
Vehicle information, titles for vehicles, bank account information, retirement account information.
Exactly.
There's a section for really any category you want to put in there. And it's generally just the basic information, not trying to shove every monthly statement in there, just like the account summaries, things like that.
Yeah, it's more of like a go-to place so that they know where to go next. So for instance, not everything's going to be in there, but it's instructions on how to
navigate the different areas. Wow, that's a brilliant idea. And what do you something like that?
Yeah. And did your father have a will? What do you tell people about wills? I'm not familiar.
Oh, yes. So my father did have a will, thank goodness. And so that made it a lot easier for my mom. So she was able to she was full beneficiary. So that was worked out really well. And so that's the other thing is like, so when we got married, we immediately got a will done. And we're actually working on looking at getting a trust. And that's definitely a good thing, especially for when you have young children. Mm-hmm. So it's definitely something to look into. In any case, at least a will. That way that you are the ones in charge and the ones deciding on, especially if you have children or any property that for that matter, where you want it to go.
Yep. And our attorney pushed that in a very nice way and helped guide us through that process and has provided us with the information needed to control what we want to have done with our assets after we die. And the trust for us will make some of those decisions and some of those things easier because we can make them ahead of time and somebody else doesn't have to essentially put the plan in motion. It's just already there. But just having that plan in place at all is a huge thing. And you can future-proof them too. Our attorney was able to write in things like, should we have any children, here is what will happen with them and with our finances. So it doesn't have to be particularly specific, but it can provide the guidance that's needed for someone to handle things if you die.
That's awesome.
Can you explain the difference between a will and a trust? What is the different functionality of both of those documents?
Yeah, will sounds simple to me, like a piece of paper that says things, but trust to me sounds very complicated.
I will say I'm not a lawyer, so I'll put that caveat in there. But a will basically is just a guide, a testament, basically, of saying that this is where I want things to go. So you're basically telling the court this. The unfortunate thing is that it's got its limitations. So, and depending on your state as well, and how it's handled. So usually we'll go, in some cases, can go to probate. And probate can be a very lengthy process. And so what people will do in order to alleviate and stop that is we'll put their assets will become a trust. There's different types of trusts. But again, that's something a lawyer should explain.
Right. So the will is the guidance on what you want to have happen.
Mm-hmm.
A trust is something that can basically own your assets that you're in control of. Similar like a bank account holds your money, a trust can hold your assets. So it can hold the house, it can hold whatever you have. And then you can basically put your guidance for how you want your finances and your assets to be handled after you die in place before you die, because the trust can have certain beneficiaries, can have other people on it that can make changes to it. It's all up to you as to what you get out of the trust. But it's basically putting those things in place before.
So it's moving your assets out of your direct.
That's one way to use it. Yeah, is to move them into this trust, and then the trust can have an ownership plan or other things that are put in place now, rather than having to have someone implement those after you die.
So does that mean, like, if you wanted to put your house in a trust, does that mean like the deed has to be in the trust name?
Yes.
So people do that.
Yes.
Yep.
Okay. So, and like a bank account too, that would have to be in the trust name.
Yeah, it would. There has to be. I'm again not a lawyer, but I think it's in the beneficiary would be part of that. It becomes part of that trust. So, and there's different types of trusts. Like there's revocable and irrevocable trusts and so forth, and they all, and
Nuances there.
Nuances there.
Maybe that's enough to dive into about trust, but that's very fascinating. I didn't know that.
Yes.
Yeah, no, it's definitely good to hear about, because I think it's something a lot of people aren't aware of, and that there's that option, beyond just a simple will. There's other things you can do to kind of streamline the process.
Yeah.
Yep, and I have friends whose families have put together a trust so that they can have easy joint ownership of something, like a property, a family property that they want to have everyone own a part of. And there's some tax implications there that I don't fully understand, but that's essentially what it's for.
Something you could discuss with your CPA.
Yeah, and circling back a little bit to the wills, I know like our town, our county offers like free will writing or will like submission or something in the county clerk's office. Do you recommend going that way, or don't cheap out and hire your own attorney?
I don't know. I mean, there are people who use the online plans and fill out the forms. We went to an attorney where we could explain what we wanted, and they could put together the will for us and the whole package.
So you're glad you went that route?
Yeah, very much.
Absolutely.
Yep.
Definitely having an expert, particularly for your state, because every state is completely different as to how it handles the whole process.
Right.
And again, it's all about probate. That's the concern.
I love your forward thinking that, here you are, you're newly married, you're a young couple, you have the world in front of you, and yet you're still taking the responsibility to think about the inevitable and just planning your future in this way. And I think it's something that a lot of people shy away from because, it's an uncomfortable topic. You don't want to think about it. It's sad. But what a great reassurance I'm sure it must give in knowing that you have your life in order. There's so many other aspects of our life that we spend a lot of time planning out and structuring, and really thinking through. And yet this is one aspect that a lot of people shy away from because of its...
Including us.
Being uncomfortable with it. Yeah, we haven't done it yet
it was
either,
also
although we
easy
have talked
for
about
us.
wanting to do it.
We have talked about it for a while.
But I love the fact that you guys went for it and took the initiative at a young age, and how it I'm sure provides clarity and reassurance too.
And it was easy for us at the time. I mean, we didn't own anything really. We had precious little in the way of actual assets.
Well, we had the house.
Right,
so,
but we didn't have a lot of equity in that.
No.
So,
and I'll say this as a coach, as a financial coach, I'll say this, like all my clients that I've had, none of them have had wills. So that's something I do talk about. I want to make sure that everybody is aware of this, that they need to do this. And like you said, it's so uncomfortable talking about this, but it's so important, especially when you have children.
Right.
But it was not hard. It was not expensive. It was not time consuming. It was basically one meeting with the lawyer, laying out what we wanted, and then he wrote it up and we signed it, and that was pretty much it.
That was it.
One meeting. How long did the meeting take?
Less than an hour.
Yeah.
Oh, wow. Okay.
Yeah. Honestly. Wow. And they'll go over the details. And again, like I'll reemphasize that, again, based on your state, it'll be different. So that's why I think having somebody, an expert in your area that it's recommended by somebody you know, is the best thing, especially. And I know with you guys, you have multiple real estates and properties and things like that. So I think that makes sense.
So definitely something we should get a move on. So circling back to kind of death and, things that all families will experience in time and preparing for that, do you have any advice you give for funeral arrangements and maybe what the actual person would want? What do you advise there?
From my perspective, go into it expecting it to be like buying a used car from a used car dealership or renting a car. There are going to be all these additional costs thrown at you that you're not going to really understand whether you need them or not. There are a lot of things that they will tack on as additional features that realistically nobody's going to remember. I mean, do what you want.
Things like what?
Oh, do you want the additional coating on the casket, or do you want? I mean, the caskets themselves are the cost of a car, and you're going to see them for like
$10,000 like the base, right?
Oh yeah, and you're going to see them for like half an hour total for the whole process, and then it gets put in another box before it's put in the ground. So it isn't even the thing that would protect your loved one or yourself. So the process feels very cheap, and ultimately. Having experienced it from this side a couple of times, those additional expenses didn't add anything to anything really.
And as he's saying this, I will say, as being the daughter and going through the mourning process, I don't remember a lot of it because it's such a blur. A lot of that part of it was, you're and for someone, in this perspective, it was like, where do I sign? You don't even realize what the costs are. So yeah, definitely being at least it would be good to also sort of think about those things, and even for your own self, for and talking as a couple about what it is you both want.
Right. Is that in something in the legacy binder, like what you would want for your funeral arrangements?
Certainly can be, yeah.
Yes.
It can be put into the will as well. You can put that in there and
because I feel like so much time there's like I don't know, I guess you're not certain like how to respect the wishes of the dead person, and you don't want to do them injustice, and then you're kind of guilt tripped into these like absolutely. You were saying all these
and
things.
You're in a vulnerable spot, and they understand that, and
right?
It's not like you have any options. Once you've picked one, you're there. So it's just the environment. And
but if you have clearly written on the will or in this legacy binder, hey, just bury me in a field somewhere.
Right.
Well, I mean, it's even much more specific than that. I mean, that kind of directive would be great, but it's again the do you want the satin lining, or do you want the bed skirt on the thing, or do you want and each one of those adds like $500 or $1,000 to the whole process as you go through it, and you're sitting there going, I really have no idea.
Right.
And again, literally none of it anyone can remember, because that's not the important part. So
right.
Wow.
Yeah, we also, in our experience with my father, I ended up having to do the wake with Tad because my mom was so sick. She ended up having to stay at home with bronchitis, I believe. And so, God bless her. So, having to visit with all of the people during the wake was very difficult.
And plan that party. And
And so that's why it is and we also have had other family members that actually did put in wishes of what they wanted in case they were to pass. And that really was so helpful, because we had a family member that wanted a party.
Yeah. It made it easy for me to decide, having seen all of that hoopla, that I really don't want that, and that's okay. I want people to have a celebration. That's great.
Yeah.
Don't spend any money on any of that stuff. That doesn't make any sense. Yeah. And it's not even my money at that point. So it would be easy for me to have them spend it.
Yeah, exactly.
Awesome. Yeah, no, definitely some great tips there about what to talk about and what to plan for and discuss with your within your couple.
Yeah, absolutely.
And what do you think about doing this kind of planning early on versus waiting till you are more seasoned, I guess.
Well, I mean, from my perspective, it was really easy to do it then. I mean, the funeral planning aside, because we got thrust into that and had the experience, but just the planning of the will for things, it was easy to make the decision of, well, yeah, let's put in a thing that says that whoever is the caretaker of our kids is going to get our assets in order to support the kids. And he's able to write that up. That made sense to us. We didn't have to think about who it was going to be or what that process would look like. It was just, yeah, that makes sense. It was easy. You know, any assets I have go to her if I die, and vice versa. Any assets we have after we both die go to our kids or whoever's taking care of our kids. You know, we had a couple of specific things that we earmarked, but you know, it was easy to think about because we didn't have a lot of complications. And now if we were to get something that we cared about enough to want it to go one particular place, it's an easy adjustment to just call up and have, you know, an updated will drawn up. And it's also,
I was going to ask, is it very final, or is a will something you can adjust with time as things
so you can
change?
Update the will and have a will that supersedes an old one. The will itself is a document that is static until you do a new one. But having gone through the process isn't scary now. It's really easy. We can just call up and do that. And then we have the paperwork and we can sign it and move on from there.
Wow, very, very insightful there. Well, thank you for all this insight in that. I would like to move the conversation on. It seems like you experienced so much, and I'm guessing that going through all of this at a young age as a young couple really inspired you toward your current passion project, which is this coaching for other families. Did you find that your motivation for this was derived from your life experience?
Oh, absolutely. Absolutely. And also learning about financial independence, officially, you know, financial independence as we know it. You know, we were already good savers. We learned about it in 2014. But we had we'd
pretty much been aiming at it since day one. We naturally don't spend a huge amount of our income percentage wise. If we get a raise, we don't go out and adjust our lifestyle in any significant way to match that. You know, go out for a celebratory dinner or something like that, but we're not getting some new car payment or, you know, planning a vacation when that happens. So that's just how we are naturally. And then we found out the FI term, and it was like, yeah, that's pretty much us. That sounds good.
And and it just makes sense.
Now, the term financial independence, can you define the meaning of that for us, for our listeners?
And also your own specific journey there, because I know, you guys have 3 kids, which we haven't really discussed at all, but also just a single income with these 3 kids, and you're still, on that trajectory of FI in your 40s.
Yeah, absolutely. So, okay, so I'd say we've been really good savers. When I say that, as Tad pointed out, probably about 2004 is when we started realizing, okay, we need to pay off our debt because we had a car loan, but
it was funny.
Loans,
we were also looking at having created some savings then, and went and talked to one of the big companies in the area here about it. And one of the things that guy said was he was actually fantastic, but he looked at it and he said, well, you don't have enough money to invest with us, but I'll tell you this, you've got savings and you've got a car loan, just pay off the car loan and then continue your savings. There's no point having the car loan. You don't need to save for a rainy day more than what you have that's sitting there. So pay that off. And even though the student loans are a very low amount, just pay those off because it's overhead. You don't need to deal with that.
So that was about 2008.
Right.
So we completely were debt free except our mortgage since 2008.
Nice. So it seems like you had saved a decent amount you had sitting in the bank, not really serving you in any way, and you were still carrying some debt. And then you had this realization that, why am I still doing this? Let's just cut with the old, get rid of the debt, and then free myself to just continue to save without any of this baggage that I have to worry about.
Yep. And this advisor really helped us with that. Just sort of gave us the final push to do that. Which was great.
Yep. And at that point we were both in IT, both IT government contractors at that point, both working full time. And so we maxed out our retirement accounts.
Nice.
And
very smart.
Yep. He did a couple of things. He was like, max it out. He said, get an umbrella liability policy because they're dirt cheap. And if someone slips on your sidewalk, they can take the house. And he wasn't snarky about it or anything, but just just general life tips for that. And there are things that we weren't even really aware of.
Right. For financial planning. Yeah.
Right.
And life insurance policies on both of us that were higher, especially since at that point we had our daughter. So yeah, that was really good advice. And that's and from that point, 2011 is when we had twins, which was a big surprise. And
and we weren't, as mentioned, consciously trying to become financial independent at that point.
No.
We were just saving and had this view that we weren't going to work forever.
Yeah.
We weren't trying to spend every penny we had, so it was fairly easy for us to do the saving. But yeah, when we had the twins, she worked initially and had a great position where she was able to work from home. But then I can remember, we were spending more than one income at that point.
Yeah.
And we had savings, and we looked at it and we're like, okay, we can trim back here. And we didn't actually trim back to the one income point with that model. But we looked at it and it's like, okay, well, we can consciously dip into our savings for some period of time and do that. And then when things lighten up around the house, she can go back to work.
Right.
We can make adjustments there, and we can recover what we've spent out of our savings during this time period. And ultimately, we actually were able to adjust our spending even more. I got the natural raises at work, which helped. And we just adjusted our lifestyle, and it really wasn't a huge impact to us. The twins were a huge impact, but adjusting our spend rate was not.
Right. And we were still able to max out his retirement account.
Right.
At least.
Continue to do that.
Yeah.
While you leaving your full-time job, staying home with the twins, and
our daughter,
income, and yet you still were able to find the space in that budget to max out your retirement funds and continue saving for the future.
And not because it was ritzy or glamorous or anything, but my daughter had been in a very expensive daycare around here, and we knew that was going to be something that would help us because Holly would be able to take care of her as well as the twins. So there were some things there, and we had some costs that we really didn't understand, but we knew would be reduced, like things like wardrobe and fuel expenses and things like that. And for us, it was complicated because we'd commuted together a fair amount, so it was hard to unravel exactly what the savings were going to be and where else we could cut back. But and it wasn't like we went on this big debt diet or anything like that. We just adjusted things as we went, and we looked at things as we were tempted to spend money on them, and decided if we should or shouldn't. And it wasn't just do we need this or not need this, although that came into play because we still did plenty of things and still do plenty of things that are for entertainment. But we just were able to adjust and ultimately in a fairly short period of time, well less than a year, adjust to be living on the one income and still saving.
Yeah. Wow. And we still had, and also I will say this, is that we still had just a couple emergencies during that time, including on Memorial Day weekend, which was the babies were 3 months old, and Abby had just gotten out of daycare. And so we were, the well had died.
Yeah, our well pump died.
So that was $3,000 out of pocket. So and thankfully, we had that emergency fund there waiting. So, we were able to use it and we were able to replenish it, which was amazing just because of this reduction. We were able to figure out. And then within a year or so, or within that year, we also were able to adjust our budget so that my daughter could go to preschool. Part-time.
Wow. So what do you recommend as a good emergency fund for couples to have or families to have as they plan their financial stability? What do you think is a good number for that?
That's a great question. I will say it really does depend on where you're living. And I feel like especially now as a coach, and talking to people and talking to clients, it really does depend on the family. Because of course, every family and every person themselves have to feel comfortable with what they have in savings. If someone feels comfortable with only a couple months of savings, that's perfectly fine, or a month of savings, that's perfectly fine, as long as they can sleep at night. Some people want to have a lot more than that. But I'd say, like, based on living in this area, and in a high cost living area, I'd say at least 3 months.
Yeah, easily.
Easily.
And I think it depends also on what their income is. If they have all passive income, they could probably have less of a buffer there because if something happens to them, they don't need to keep working for that income to come in.
Right.
Around here, there's a lot of entrepreneurship, and
Yes.
For people who are planning on starting a business, the recommendation is more income saved because as you're starting something up, generally you're not going to be making a huge amount of money to start, and it might take a lot longer than you'd expect to start bringing in real income. And I've had a number of friends who have done that successfully, and wrote out the long startup process, or longer than they thought anyway, startup process to start earning real income.
Yeah.
But if they hadn't had the savings, they wouldn't have been able to do that.
And in terms of financial independence for you, are you guys seeking any kind of passive income route, or it's mostly just the retirement account funding that, maxing that out?
Yeah, it's retirement, maxing that out, as well as our own investing taxable account, and then what we have there. So it's going to be the passive, basically index funds. As most will say, but
no, we're not investing in real estate or anything like that in order to get a passive income. Yeah, exactly, not yet. To do that,
I like that. You're striving towards financial independence aside from pulling from something like real estate, which I think is a common thing we've had on the show, and you're approaching it from a different perspective. And I like hearing about alternative methods towards financial independence.
Well, and we've also seen people do it in different ways. Like I've got a friend who, for the longest time, his wife was a huge spender. She was a huge spender until she became his ex-wife, but she was a huge spender. And for him, if there was money in a bank account, she was going to spend it, period. And so what he did is he would take any extra dollar he had and he'd put it to pay down the debt on his house. And then he had, for his rainy day fund, a home equity line of credit so that he could get money back out of the house whenever he needed to pay unexpected or even expected expenses. I mean, he couldn't save up for a set of tires because if that money was in the account, she'd just spend it. And that method worked for them. And he's on track to retire early as well, having survived that process. So I think it depends on the person. Hopefully, you don't have someone in the relationship that's literally spending every dollar. That would make it very tough. But there are different methods. That one worked for him. Now that they're separated, he can have liquid savings. He doesn't just have to put it all into the mortgage, but it works, and he got through that.
And Holly, I know you mentioned geo arbitrage at some point. How does that factor into your financial independence outlook? Yeah,
that's definitely something that we're very interested in.
And can you explain what that is? I don't think you really explained.
Oh, sorry. So geo arbitrage is the idea of when you're living in a high cost of living area, like we are. Usually real estate costs a lot, as well as, things around here cost a lot, everyday groceries, and living expenses. So the idea would be is that you would eventually sell your house and then take the equity that you got out of your house, and you can go move someplace that's a lower cost of living. And it could be someplace somewhere else in the country, somewhere in another country, and then be able to use that wealth, and make it spread out a little bit better than it does here.
We've got a friend of the family who moved to the Philippines because of the healthcare costs there. They weren't going to be able to retire and live the way they wanted here with their medical issues, and so they just moved to the Philippines, and they pay cash there for their medical expenses, and it's very affordable for them.
It brings up a lot of points, where I feel like sometimes people can get caught up on just limiting themselves to where they currently live or maybe where they were brought up. But that the idea that not everywhere in America is the same, and, you can pick and choose places for various reasons that could be more beneficial for your family. Like, for instance, I know that you move to someplace like Georgia or New Mexico, and if you live in the state, they provide free college tuition for the families that live in state and go to school in state. And for someone who lives up in the Northeast, that's like such an unheard of idea. We
Yeah.
have community colleges and you can save that way, but basically you're never getting your education for free. And so sometimes you can pick a state depending on your family situation that might serve you in that way too. If you have older kids and you're looking towards college expenses, and something more affordable, you can make that geo arbitrage move for those reasons too.
Yes, exactly.
Yep, and actually, another friend of mine did a similar thing, not for free college, but in order to do the prepaid college in a different state. Actually, it was great for him. His parents ended up being able to do that, but they moved and they were able to prepay for college for his kids at a greatly reduced rate. It was their state's version of that, and it worked out for him until the point came that one of his kids didn't go to college, and now he has college money that can only be spent on college for someone in the family.
Maybe a grandchild or something.
For
Exactly. Could be a
prepaid college situation, because I haven't heard of that. Is that you pay the school directly or you pay the state?
No, it was done through the state. So it was any of the state schools you could prepay the college. Actually, I think Virginia they do that in Virginia too.
Yeah, Virginia does that too. It's called Virginia Prepay. And it's like, and way Virginia does it, I'm familiar. We do Virginia Vest, Invest, which is the 529 plan. And we have that for each of our kids. But the prepay is interesting because it's where you're basically prepaying just for tuition.
Mm-hmm.
So it's not for room and board, and it's not for books, if I understand, any of the other things. But it's a set price.
It's a fixed rate.
Fixed rate.
It's closer to the current rate than what it would be in the future.
Yeah.
You're basically paying what amounts to today's rates. And then when your kid goes to school, if they go to an in-state school, which presumably they will if you've prepaid for it, all of the tuition costs are covered.
Wow. That's a really interesting plan.
Mm-hmm.
Yeah, there's pros and cons to it. The cons is that, of course, like depending on like if your child doesn't go, it's a big con, right? And also, of course, like there are lots of options of using the best plan that some people will say that's actually might be more beneficial because you're prepaying and it may be cheaper,
right? Because tuition, at least trending now, seems to always be rising every single year.
Yeah,
exactly.
Yeah.
Yep.
Exactly.
Or if your kid ends up wanting to go into a program that they don't offer at an in-state school, there are other risks there.
So
at least in Virginia,
can't be carried over into other states.
Yeah, it depends on the plan. I'm not positive of Virginia's, but I do know that I'm more familiar with the 529 plan, which is very, very good. It's a really good plan.
So I kind of want to circle back a little bit to your kids, especially because you guys have identical twins, which is very rare and I'm sure very exciting. So first question, what was easier, having your first child or having your second set be twins?
Oh, first child was
first
easier.
Child was so easy. Oh my goodness.
Parents though, learning curve, no?
Yeah, even that. I mean, we talked about it after we had one kid. It's like, okay, we've got this under control. This is not easy, but it's easy and it's manageable. Should we really add a second kid to the mix here? And we ultimately decided yes.
Yeah, 2 kids would be good.
But
exactly.
But as I described to a couple of my coworkers who ended up getting pregnant with twins, I figured there'd be economies of scale, like, things that you're going to do anyway. You just do a little bit more and you've got the second kid covered. And no, 2 kids is more than twice the work of 1 kid. I mean, first of all, from my perspective, the kids need, when they're very little, they need to be fed every 2 hours. And it takes an hour total to feed and change and get a kid back to sleep. And so if you're doing that sequentially, that's 24 hours of just feeding a kid per day. And it just adds up because, it's exhausting. I mean, a singleton is exhausting, but with the twins, it just never stopped.
Wow.
And so it was a lot.
Yeah, I was thankfully when I found out I was pregnant with twins, I immediately reached out to a friend of mine who's also had twins, and she said, join the local moms club for moms of multiples. And so, which was the best advice ever. And it turns out in our area, we have a very big and because it's a high cost of living area and also a very influential area, we have a lot of moms with twins and triplets.
Wow.
So our particular club has over 350 members.
That's
Wow.
crazy. All with multiple kids, like twins,
Yes.
triplets. Jeez.
Yes, and we have one quad.
The parties are
One quad.
Wow.
Yeah. And so it's a great support group. I joined when I was about less than 18 weeks pregnant with them and learned a lot, including the big advice was always feeding them at the same time,
Yes.
because that method, if
Yeah.
you did it individually, you would
You just never sleep
you
the
would never
first couple of
sleep.
weeks.
Mm.
Particularly as the twins and multiples tend to be premature, so they have other issues, and just it just adds up.
Yeah,
Mm.
it's a high risk pregnancy, no matter how you look at it, and it's a very risky for the mom and it's risky for the babies, and so just going through the whole process is a very emotional, stressful time. So
Yep. And we were looking at her staying home, as we'd mentioned.
yeah,
We knew that there was the risk of that job not lasting much longer, so there was that thrown in there.
Yeah.
Mhm.
so and when we found out, it was like this complete, okay, whoa, we got this emergency, like, what do we do? How do we deal with this? And so that's where we also changed our savings. And in some sense, we saved more in some areas. And then we also spent some in some areas, because we realized we got to do certain things now before the
Yep.
babies came.
Mm.
We redid our bathroom.
We redid our bathroom as an example. And we also, realized, some other things we realized, okay, where are areas we're going to spend most on, like diapers.
Mhm.
So we did like a diaper party for our shower,
Mhm.
as an example. And, we really look, and we planned out food. I think we even bought, what was it, 150 plus jars of baby food. I mean, we did everything we could. Stockpiling and trying to prepare. My plan was to breastfeed and pump, but it turned out that didn't work out after a couple months. So we ended up having to do formula. So we had to look for
That's
good
a
prices.
big added expense.
Yes.
Well, and the process too. I mean, when I was making blenders full of formula at a time, just because of the volume.
Yeah.
Mhm.
Absolutely. So yeah, it was definitely, so going through that process of having twins, then going from 2 incomes to 1 income
Mhm.
and adjusting our expenses. And
we didn't have our eyes on retiring early or anything at that point. We
No.
just had our eyes on getting through it.
Getting through a year,
Right.
surviving.
Exactly.
Yeah. So my philosophy I came up with was taking 1 hour at a time, not 1 day at a time, which turned out to be it was the only way to survive it. And later I became basically a coach in the moms club for moms, multiples, the moms that were new moms, as well as moms that were pregnant, to go over these tips and tricks and such, because it is
And help them understand they would get through it
they
too.
would get through it too.
Can
daunting.
you go over a little more tips and tricks? Because I don't know, to me it's fascinating that there's this moms of multiples groups, and it sounds like they're kind of all over the country.
Yes.
Big organization. Can you just go over a little more of what's, I don't know, just being
What support
only
do you
singletons
gain?
we seem to have. Although her dad's a twin, so we were kind of hoping for twins, but I don't know, maybe that's craziness.
Oh no, now I
Wouldn't wish
say
that
it. I
on
don't wish
anyone.
twins on anyone.
But
Yeah,
what are some specific things that you kind of help get parents ready for twins?
Well, the biggest thing is we usually meet our moms when first off they've just found out, and they're in shock. So the first thing is to let them know you're not alone. We're here, and so we have a support groups where we're available online. Most of them have Facebook or some sort of online platform. And in addition, a lot of them have meetings where they'll get together once a month. In our club in particular, we do twice a month activities as well. So it's just hey, moms, go out and hang out and chat and talk. For our new moms and our expected moms, it's once a month where we'll get together and just go over what's going on and how each of their issues that may be happening, because everybody's got an issue, right? And what their concerns are, and to calm them and realize it's okay. We totally understand. We've been there. We get it. And you got to, and as Tad mentioned, these babies, some of them are in the NICU for a long time. And in some cases, there is also loss too. Because it is a high risk pregnancy. So we support our moms in all aspects. And it doesn't matter if you've had loss, you are always a, twin mom, and we support all of our moms in that way, and our dads as well. So it's wonderful because we go over everything, feeding issues, health issues.
It's sometimes little things. I mean, like with singletons, you can probably remember that there are things you don't remember. And there are times where you were just getting through the day and it was just, everyone, including the baby's exhausted.
Right.
There's a difference when you have two that are exactly the same age. To the point where you have to write down that you fed this one and you fed that one, because you can wake up the next time and not remember if you fed both of them. Quite easily, or you forgot to bathe one of them. I mean, just little things like that. Just get a little piece of paper and you write that down and you keep a tally so you can look at it and say, okay, I took care of the things I needed to, or I didn't, and I can do it. Because otherwise you don't sleep. You have to go back and do it again. And changing the dry diapers and making extra formula when the kid's obviously full.
Can you guys tell them apart?
Yes.
We can. So I can. I tell people I can always tell them apart if I can see both of them. My daughter, who is 2 when they were born, can always tell them apart, no matter what.
Wow.
For us, their head shapes are a little bit different, and some of their veins are pronounced in different ways. But that's literally it. I mean, that's how we can tell them apart.
Yeah, they're very identical. Yeah, we actually kept their little bracelets from the hospital
as long as we could.
As long as we could, on their arms and their legs. They were so tiny. They were. We were fortunate. They were 36. I had them at 36 weeks. Scheduled C-section, and
no NICU time.
No NICU time, which was a shock. And they were 5'9" and 5'10", and so they were tiny. Yeah, they're really good weight.
Good weight for
36 weeks.
But then in terms of like financial things, one of the things that we dealt with was, at least at the time, they probably still do, they do a car seat challenge for the preemies at the hospital we went to, where they put them in a car seat in the basically the nurse's station. They strap them into the regular car seat and they put them at the angle they're going to be in the car, and they have to not turn blue in an hour. But that's the test. And so they said, bring your car seats in, we'll put them in, we'll do the test, because they don't want to have a problem on the way home. I mean, that would be terrible. So we brought the car seats in, put the kids in the car seats. Actually, the nurses did while I watched. And one of them failed the car seat challenge. And they said, okay, great. Well, your car seat's only good down to 7 pounds, but this other brand is good down to 6 pounds. And so I ran out and bought 2 of those, which are very expensive, and brought them in, and they strapped them in. And the other kid failed in that car seat. And they said, okay, well, now you have to buy the car beds, which are, so we had 6 car seats and 2 kids trying to get home. Where we knew we weren't going to be using 4 of the car seats. I mean, it's just little things like that. And it's not like you have another choice. I mean, they literally won't let you leave unless you've got something that they are going to survive in to get home. So,
a lot of, from what I understand nowadays, things have changed a little bit where they still do those tests based on the weight of the babies. But a lot of chances are like, even in our circumstance, we probably would have been in the NICU for several days, like otherwise, just because that's technically what they tend to do nowadays. So, and
just preparing for that, I mean, at my work, one of the things that I mean, several of us push is that when people are thinking about having a kid, like a year ahead of time, start saving up your leave, because you don't know if you're going to use it all when the kid is born.
Right.
You just don't know.
You just don't know.
And it's not that much of a lifestyle change typically to start banking extra leave. If they shave a day off of each of their vacations, it adds up pretty quick.
Well, I love how we kind of we started with kind of death, and then we've circled to new life, and we just kind of covered a whole gamut of different aspects of life on this podcast, and it's been great sharing with you guys. I just wanted to ask, like, it seems like you guys are very resourceful and well-researched in a lot of this stuff. Is there any resources that have really made a big difference in your, understanding of a lot of these things, and anything you would recommend for our listeners? Books, quotes, whatever.
Books and quotes. Well, one of my favorite books, I would say, is Getting Things Done by David Allen. is one of my favorite books, just because of the organization aspect. And he sort of provides sort of a basic framework of how to create a plan for yourself. So this is something that I really have found has helped me stay organized. And then, of course, it can be adapted. So, for instance, as things have changed, like as the kids have grown and changed, and of course, now that they're in school and I'm now doing my business, I do change my systems. But that's a really good book.
Awesome.
Okay.
Yeah, I think I've started. I was liking it. I didn't finish it though, but that's a good recommendation.
Yeah.
And
Go ahead.
I was just going to say, for me, the resources that I would recommend are actually the ones that you either know or are going to interact with.
Yeah.
And it sounds weird, but this is sort of back to the doctor's thing. Call the companies. I mean, not just on the financial side. If there's something that you're confused about, I mean, I am far from an extrovert, but just calling the companies and whether it's easiest for you to just play dumb and let them explain their side of it, that helps a lot for a lot of the things we've talked about. Particularly if you don't take everything that they say as 100% accurate, but just understanding their position on things. And it's everything from the banks to doctors' offices to new businesses, the contractor you're going to have. Call and find out what their perspective is on it, because that's where we've learned a lot of these things, is by asking the people that we're trying to work with their side of it. And then you can go and validate that someplace else if you want, but at least you understand what their side of it is, and you can counter it or not, rather than going into everything blind.
Yeah, very good advice there.
Well, Holly, Tad, thank you so much for coming on the show. If people love your story, if they want to get more advice, or if they want to come to you for coaching, Holly, how would people get in contact with maybe the both of you?
Definitely, you can reach us on our website, microstuff.com. I'm also on Twitter, ms _financial coach, and also on Instagram, and all those links are available on our website at microstuff.com.
Awesome. Holly, Tad, thank you so much for coming on the show.
Appreciate it. Thanks for having us.
Thank you so much for having us.
Awesome.